But what's
Unlike
interesting here, Sir Mike, you now have BSP Governor Ben Jokno saying that this is going to be less of a threat for economies like the Philippines compared to other emerging economies, which might see an exodus or an exit of capital outflows. Where do you think is Jokno coming from, and do you subscribe to that?
well, Jess, that's what we really have to take that also in perspective, in the sense that when, whenever the Fed adjusts its key policy rates for the Fed funds rate, there's a good correlation that many other central banks, especially those in developed countries, that move in lockstep with the Fed. But we have seen in recent years, though, that has changed quite a bit, especially here in the Philippines. There's always some room or leeway on the part of local monetary authorities on whether or not they'll follow whatever the Fed does, especially now with the estimated increase in the Fed funds rate. Because now there are peculiar factors here in the Philippines. If you're to at least try to look at the what has been done so far, especially since last year, we have seen a much aggressive monetary easing here in the Philippines. That's 200 basis points. That's in 2020. That's among the most aggressive monetary easing or the cutting of policy rates in among relatively large countries worldwide. And that's even bigger than what the Fed did. And now, if you are to, of course, if things get better on the economy and there's a need to take back some of the monetary easing, uh, therefore, there's still that flexibility also.
Mhm.
Uh, by not necessarily move in lockstep or in the same pace as the Fed.
Mhm.
Because now, of course, learning from the lessons in the past years and decades, using these tools, especially the monetary easing, the policy accommodation that have been used by the global central banks. So they try to fine tune also, uh, because it's a delicate balance